Hey, what's up, you guys? Welcome back. In today's video, I'm going to go over Algorand. Right now, we are trading at 36.75, 24-hour volume. We are up 111%, and market cap, we are up 11.86%. So heading over to the chart here, I am zoomed out on a weekly chart. I'm going to cover up 1 day and 1 hour time frames as well. The reason why I'm zoomed out is we're going to focus in on our volume profile off to the side, the blue and yellow indicator, which measures dollar amounts of the volume. Now notice that we've got 3 big nodes here that's essentially sticking out. The reason why I want to do this is because we get our supply and demand zones, ultimately either where the price is wanting to lead to. And we've got a really good capture of a price at 30 cents to 34 cents. As we can see, a lot of our candlesticks were in this range itself because what we're going to experience in the next couple of days is price going to resort and come down to this level because we're consideredly to be overbought. And as we can see on our RSI, as I zoom in here, we are essentially at 85% for our K line, and D line, we're at 75%. Regardless of the lines itself, we are above 80% in general. Now, keep in mind for ALGO, what we can experience is the RSI reaching either 97% or at 98% itself before price ultimately retraces back down. We can see as soon as it crosses over at a peak area of resistance, price retraces down to an area of support and then once again initiates a buying opportunity. So if we take a look here, we are going to anticipate in the next couple of days or so, because we're on the weekly time frame, rolling into next week, a possible crossover. And when we see the crossover, be prepared again for price to come back down to areas of retracements. We've got our 61% here at the 33 cents and then 78% of our fib at 31 cents. And all of these here in this fib chart is essentially at the supply and demand zone that I showed you earlier. Now, as we can take a look at the momentum of our MACD indicator at the very bottom here, we can see that we have been in the green. Essentially in the green here is good. However, the bars itself remained very minimal. So what we experience in that minimal momentum is price consolidated sideways from support, resistance, support, coming into resistance once again. And because we were considered overbought at the very top here, crossing the 80%, we don't anticipate price to close above it. Unless, however, we do see the MACD indicator getting bigger in the bars. Strength in the momentum is going to get us above the resistance and close above it. Most importantly, as we can see where the candlestick is, it's well above our 20 moving average. If we do want to get into more of a bullish primary term or primary market for algo, we essentially need to close above the 20 moving average, and here's a prime example of it. So in the next couple of days or so, if we do see us close above the 20 moving average, we need to make sure to see if we can retest the 20 moving average coming down as an easy support, and price will soon race and rally to the bullish side. Heading over to our daily chart here, we can see again, huge strength of the volume. So we had 125 million trades that we did yesterday. As an impulse of that, you'll notice that we broke through an area of resistance at 38% of our fib. A lot of our candlesticks here in July has retested this area as resistance as we finally broke through it yesterday. But if we take a look at the session today, what we can see is at the very top here, this wick itself is twice as long as the body, and where the body is found is below 50% of this candlestick. So essentially this could be treated as a shooting star candlestick. However, the characteristic of this bottom wick is not matching because we either want a shaven bottom with no wick at all or just a very tiny wick. Even though it is not a shooting star candlestick, what we can observe is that the session itself pushed at the very bottom. The bulls rallied it as high today at 38 cents. However, the bears pushed it as far as 36 cents at 36.50 as well. So this gives us a signal that the bulls are losing the momentum. So long, again, we do a short pullback, we can rally to retest the resistance of 38 cents once again. If We do have a shallow pullback and pushing the price, closer down to the 50%, which is the 33%, 33 cents, then we're losing momentum and we may not be able to rally and retest this area of resistance. Now, if we take a look at our RSI, we are considerably overbought here as predicted. If you saw our Bollinger Bands as well, we're touching the upper Bollinger Band. So what we may experience in tomorrow is a huge sell-off of the price for algo as we are considered to be over spot and price again is going to retrace downwards. Now going into immediate short term here for 1 hour, we can see at the very top of our chart here for our RSI, we are considered to be oversold and an opportunity for price to retrace up, going upwards here. So another key area that we can see is we're near the 20 moving average, which is again this orange line. This orange line has been treated as a good resistance, turned into support multiple times here, as we can see on September 20th. It was treated as resistance, support, and further from it. So if we are coming to retest to the 20 moving average, as we can see around our 61% of our fib, then we may soon turn this short-term bullish algo to a bearish side. So let's take a look at what that looks like. If the RSI itself is showing as an oversold, there is an opportunity to buy it. However, take a look at the candlestick that we have right now. There is aggression over the buyers and the sellers itself. There is little to no wick at the very bottom, and we can see that the bulls are trying to push the session as well. With the body itself is the entire candlestick range. So we are getting aggression from both sides. It's only a matter of fact that if we do close below the 20 moving average, the bears essentially won it. However, what we can see again, we are considered to be oversold, so price may come up just so slightly here for the 37 cents. So long again, the MACD indicator here shows us that we are losing leverage from the red and going to potentially switch to the green at a key area of resistance. We're going to break that. Now, we are coming down to the bottom here, and we do see the MACD indicator growing strength in the red bars, then we are going to break through the support, and this is going to be our area of convergence, which essentially just means an area of point of interest is going to be 35 cents. And we're ultimately, if the price does come down to 35 cents, we're going to have a really nice support around this level here. So that's my video for algo, you guys. Thank you so much for watching. Like and subscribe to the channel, but I'll see you next time.